You are welcome to another session of the program Accounting Equation. You can like, share and subscribe to my channel for more beautiful accounting programs. Let us start. What is the accounting equation? The accounting equation is a basic principle of accounting and a fundamental element of the balance sheet. The equation is as follows. Assets equals liabilities plus shareholders' equity. This equation sets the foundation of double-entry accounting, also known as double-entry bookkeeping, and highlights the structure of the balance sheet. Double-entry accounting is a system where every transaction affects at least two accounts. For example, an increase in an asset account can be matched by an equal increase to a related liability or shareholders' equity account such that the accounting equation stays in balance. Alternatively, an increase in an asset account can be matched by an equal decrease in another asset account. It is important to keep the accounting equation in mind when performing journal entries. Journal entries often use the language of debits, doctor, and credits, cr. A debit refers to an increase in an asset or a decrease in a liability or shareholders' equity. A credit in contrast refers to a decrease in an asset or an increase in a liability or shareholders' equity. As mentioned above, the accounting equation forms the basis for the balance sheet. The balance sheet is also sometimes referred to as the statement of financial position. The balance sheet is broken down into three major sections and their various underlying items: assets, liabilities, and shareholders' equity. Below are some examples of items that fall under each section. Assets: accounts receivable, inventory, property, plant and equipment. Liabilities: accounts payable, long-term debt. Shareholders' equity: share capital, retained earnings. The accounting equation shows the relationship between these items. The accounting equation can also be rearranged into the following form. Shareholders' equity equals assets, liabilities. In this form, it is easier to highlight the relationship between shareholders' equity and debt, liabilities. As you can see, shareholders' equity is the remainder after liabilities have been subtracted from assets. This is because creditors, parties that lend money such as banks, have the first claim to a company's assets. For example, if a company becomes bankrupt, its assets are sold and these funds are used to settle its debts first. Only after debts are settled are shareholders entitled to any of the company's assets to attempt to recover their investment. Regardless of how the accounting equation is represented, it is important to remember that the equation must always balance.